Hello traders, welcome to the first lecture of this section, the course which is based on commodity. So how to trade commodity and futures market for profit. In this lecture, we'll focus on what are commodities and what are the different commodities which are tradable. So first thing first, what are commodities? So commodities are naturally occurring material or goods which has some economic value, and it is mostly used as a raw material to produce some final product like energy, food, jewelry, etc. And most common example of commodities are crude oil, gold, silver, coffee, and natural gas. So what is mean naturally occurring material? Naturally occurring material, as you can understand, right, it is something which nature is giving us, right, which is something like we found from nature. And the crude oil which are like mined, like crude oil, like gold we get from the mines, right, silver, even diamond, right. So when we find these products are definitely have some economic value. There's some demand of these kind of things. When I say that the things are given by nature, so you can say that rock is also given by nature, right? Why it's not a commodity? Because rock doesn't have a economic value as such, although it can be used to produce something, right, some bricks or maybe something else, but it is not a tradable commodity because it doesn't have a economic value as such. So what is the difference between the rock and gold? Although gold is also kind of a, even diamond is also kind of a rock, but diamond has some economic value, so that's why it is a commodity, not a rock. And when we get these products, these are not usable immediately. These are something which can be used to produce a finer product. Like gold can be used to produce jewelries, coffee can be used to produce some food, and crude oil can be used to produce some energy products like petrol, diesel, and all those things. So these are basically commodities, right? So these are not the only kind of commodities. There are so many kind of commodities. There can be different kind of commodities like agriculture products like grains, wheat, barley, rye, cotton, flax, tobacco, rice, peanuts, sunflower, nuts, all those things. Agriculture product like timber, forest, these are commodities. Livestock like live cattle, hogs, or even reptile, these are commodities. But from economic point of view, from trading perspective, these are not everything which are tradable to a retail investor. These are mostly the things like live cattle, for example. These are the things which are mostly used as a forward contract in the forward market, not in future market. And what's the difference in forward market and future market? The only difference is, although these both are contract between seller and buyer, but the difference in forward and future contract is that future contract is more standardized. It is traded on the exchanges, whereas forward contract is between two people and it's very customizable, it's very flexible. So we'll touch base on these concepts later when we move forward to our course, but for this lecture's perspective, these are different kind of commodity. These are just some example. There can be hundreds of kind of commodities, but from our trading perspective, there are a few categories which we'll focus on. And what are these? So these are most common commodities. And on the broad level, from futures trading perspective, commodity market is divided into four broad level categories. And these four categories are precious metal, base metal, energy, and agriculture. So some example of precious metals are gold, silver, platinum, right? Base metals are copper, zinc, nickel, aluminium. Energy, crude oil, natural gas, heating oil, gasoline. In agriculture, the most common example which are traded in the market are wheat, corn, soybean, and coffee. So these are some most common examples of different category products. So four different categories are precious metal, base metal, energy, and agriculture. So we'll focus on these type of commodities. On broad level, commodities are often split into two broad categories, which are hard commodities and soft commodities. So what is hard commodities? Hard commodities are natural resources that must be mined or extracted, such as gold, rubber, oil, something which nature has given us. Soft commodities. These are also given by nature, but these are produced by man mostly, right? These are mostly agriculture products such as corn, wheat, coffee, sugar, soybean and pork, right? So these are soft commodities. So these are two broad level categories which are generally used to categorize different commodities in market. What are most common commodities which are traded in the market and which will we focus on? So first is crude oil, coffee, natural gas, gold, wheat, cotton, corn, sugar, and silver. So these are the most commonly traded commodities, and we will be focusing on these when we move forward. So these are some example of the commodities which are mostly traded and have most of the volume. So apart from these, if you try to go into something else like live cattle, like orange juice, like sunflowers and these kind of things, you don't get much opportunity to trade, right? Because these are not very heavily traded. We'll try to look into these and we'll try to figure out which are giving us a good opportunity to enter into the trade. So that's what I wanted to cover in this lecture. In the next lecture, we'll go deeper into the concept of commodity trading. We will see what are the futures, what exchange they are traded on what basis we should select our candidate for trading, what are the pros and cons of trading different instruments. So every commodity provides you several instruments which you can trade into, right? So we'll look into all the things in detail in the next lecture. So thank you very much, guys. I'll see you in the next lecture.